Global headlines are loud: tariffs, trade wars, shifting alliances. But something quieter is happening beneath the surface, and it's starting to ripple through industries that car enthusiasts care about more than you might think. From declining travel into the US to shrinking exports and mounting pressure on global brands like Tesla, the numbers are beginning to tell a deeper story. This isn't a collapse. It's a coordinated shift in behavior across key markets. And when sentiment changes, industries move. So what's really driving this global pullback? And why should it matter to the automotive world? Let's break it down. Silent shift. America's image faces global consumer pushback. The real story isn't just falling numbers, it's multiple markets moving in the same direction. For decades, American brands symbolized innovation and status. But by 2025 into early 2026, that image began facing resistance, especially where political tensions intensified. Tourism shows this clearly. International visits to the US dropped 5.7% in 2025, even as global travel rebounded, highlighting underperformance. Europe proved particularly sensitive, with sharp monthly declines during tariff-heavy periods. Consumer behavior is shifting too. More Europeans are choosing local goods, or avoiding US brands altogether. This isn't just policy, it's perception turning into action. And when sentiment reshapes spending across travel, retail, and vehicles, the economic impact becomes impossible to ignore. But when perception starts influencing real-world decisions, nowhere is it more visible than in how people choose to travel. Tourism pullback. Travel becomes a global political signal. Travel is one of the clearest signs of this shift. The US remains a top destination, but a 5.7% drop in international visits in 2025 shows how policy, perception, and border concerns influence spending. That decline means fewer high-value tourists, impacting airlines, hotels, and local businesses that depend on foreign visitors. Australia reflects this trend, with travel to the US down about 6.5%, signaling caution from long-haul, high-spending markets. Canada is even more critical. Return trips fell 12.5% in February 2026, marking 14 straight months of decline. That's not a one-off, it's a pattern. This isn't a collapse, but a sustained slowdown. And for border states, tourist hubs, and retail-heavy regions, that shift is starting to hit hard. And when travelers pull back, the next domino isn't far behind, because spending habits don't just stop at tourism. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to bring you deeper insights into the automotive world and beyond. Now, let's take this a step further, because the real financial impact is just beginning. Beverage shock. Whiskey, wine, and exports take hit. If travel reflects emotion, exports reveal the financial damage. US whiskey, wine, and spirits have been hit hard by trade tensions and shifting consumer sentiment. Whiskey exports to the EU fell 35% in 2025, while Japan dropped 28%, reversing years of global growth. Canada delivered the biggest blow. Provincial bans removed American alcohol from shelves, sending US spirits exports plunging 85% in one quarter. Wine followed, with exports to Canada collapsing nearly 78%, wiping out over $350 million. This goes beyond politics. When demand shifts, supply chains react. Producers cut output, retailers adjust orders, and communities feel the impact. Even Jim Beam paused production, highlighting how quickly global sentiment can disrupt entire industries. But this isn't just about products disappearing from shelves. It signals something deeper happening between nations. Canada's pivot, breaking dependence through strategic diversification shift. Canada's shift stands out because it's not just consumer-driven, it's strategic. For decades, the US and Canada were tightly linked, but tensions in 2025 reshaped that relationship. Tariffs and political rhetoric triggered a nationalist response, now visible in travel, retail, and trade. Canadian trips to the US fell 12.5% in February 2026, marking 14 straight months of decline, while more travelers chose overseas destinations. That spending isn't gone, it's redirected. On trade, Canada is reducing reliance on the US, driven by energy expansion. The Trans Mountain Pipeline opened access to Asian markets, increasing flexibility. This isn't just a boycott, it's a strategic diversification. And for American companies, it's a warning of how quickly a key partner can shift direction. And when national strategy shifts this fast, even the biggest global brands can feel the pressure. Tesla tested, brand power collides with harsh market reality. Tesla's recent performance shows how quickly momentum can shift, even for a segment leader. In 2025, Tesla's European sales dropped 27%, despite EV demand growing across the region. That contrast is critical. It wasn't the market shrinking, it was Tesla losing ground. Early 2026 amplified the concern. Registrations plunged in key markets, including a 42% drop in France. Norway's sharp decline looked dramatic too, though broader market conditions played a role. Still, Tesla's underperformance stood out. Then came March, a rebound as EV demand surged again. This tells a more balanced story. Not collapse, but volatility. Tesla remains competitive, but no longer untouchable. Canada presents a tougher challenge. Industry estimates suggest deliveries fell sharply in 2025, particularly in Quebec, where incentives and costs shifted demand. The bigger takeaway? In today's EV race, brand image, leadership perception, and product timing matter just as much as performance specs. And that brings us to the bigger picture, what all of this means for America's global position. Final verdict: America's global influence faces critical turning point. This isn't a dramatic overnight collapse. It's something more subtle and arguably more powerful. A shift in behavior across travel, trade, and consumer preference is beginning to take shape. The US still holds massive influence, especially in automotive innovation, from V8 heritage to EV leadership. But the signals are hard to ignore. Tourism is softening from key regions. Exports, especially in alcohol, have taken serious hits. Canada is actively diversifying. And Tesla's journey shows how even dominant brands can feel pressure when perception changes. In the automotive world, we've seen this before. Brands that adapt survive, while those that ignore market signals lose relevance. The same principle applies here on a global scale. The real issue now isn't dominance, it's adaptability, and whether US industries can recalibrate before these shifts become permanent habits. Now we want to hear from you. Do you think this global pullback is temporary or the start of a long-term shift? Can Tesla regain its dominance in Europe and Canada, or has the competition caught up? And how much do geopolitics really influence your decisions as a car buyer? Drop your thoughts and experiences in the comments. If you enjoyed this deep dive, make sure to subscribe to Highway Herald and stay ahead of the latest vehicle updates, industry shifts, and global automotive trends. Thanks for watching, and as always, we'll see you in the next one. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.